Hi everyone, Stacy Whiter here on behalf of Campus Mortgage with some quick tips for you on USDA Loan Basics, Part 1. Now just a quick reminder before we get started, this video is for informational purposes only and should not be considered legal advice or used in place of USDA guidelines. Also, this video was created on March 20th, 2017, and the information contained in this video is subject to change without notice. The USDA has worked with approved lenders to provide low and moderate income households the opportunity to own adequate, modest, decent, safe, and sanitary dwellings as their primary residence in eligible rural areas. So what is a guaranteed USDA loan? Well, the United States Department of Agriculture partnered with approved lenders to offer specific financing to be eligible to borrowers who reside in rural areas. And as part of this program, it has special characteristics and special attributes, which we'll talk about in just a second. But it's important to know that the reason it's considered a guaranteed loan is because the government actually insures a portion of each loan, very similar to VA or FHA loans. But this loan is specifically insured by the United States Department of Agriculture. And basically, they insure up to 90% of the mortgage for lenders who offer this program to borrowers to help offset the risk of providing 100% financing. So let's take a look at the loan attributes of a USDA guaranteed loan. It is 100% financing, so no money or no down payment is required by the borrower. It is for primary residences only. It has competitive fixed rates. You can get a 30-year or a 15-year rate. You can do a purchase or a refinance on this mortgage. There is credit flexibility. Now, the USDA does not set a minimum credit score, however, most lenders do. There's no PMI. Even though you're doing 100% financing, there is no private mortgage insurance. Also, this program is not restricted to first-time homebuyers. One of the other attributes of this loan is it does have income limits, and we'll talk about that more in part 2 of this video series. But in order to make this program available to low and moderate income borrowers, the USDA has set certain income limits per county and per state. Now, there is no PMI on this mortgage, but it does have what's called an upfront guarantee fee. And that fee varies, but at the time of this recording of this video, the upfront guarantee fee was 1% of the loan amount. And it works just the same as the upfront mortgage insurance premium in an FHA mortgage, where the borrower can either pay or finance in a guarantee fee of 1% of the loan amount into their mortgage. The loan also has an annual fee, and that varies as well, but again, at the time of this recording of this video, it was 0.035 was the annual fee. Also, another unique attribute to this program is that the property must be in an eligible area. And in part 2 of this video series, I will show you how you can find out whether or not a property is in an eligible rural area. Next, the loan itself must be approved by a USDA underwriter. So the standard process is when a borrower submits their application and their documents to a lender, it's going to go through the full processing and underwriting system or process with that lender, and typically when it's finally approved and it has just about everything, then the lender is going to send it to USDA then for their full underwriting approval. So you have to think of these loans as requiring 2 full sets of underwriting approval, and because of that, longer closing time frames may apply. So usually a recommendation is that if a real estate agent is writing a contract on with a USDA loan on a rural property, they should estimate somewhere between a 45 and 60-day closing, just to allow for the additional steps and that additional underwrite that's going to be completed by USDA. All right, everyone, that's all for now. Thanks so much for watching. For more tips and videos, please visit campusmortgage.org and watch for their weekly mortgage tips and videos designed for all mortgage professionals, including underwriters, loan officers, processors, closers, and post-closers. Thanks again. We'll see you next time. Bye-bye.